Seven-figure squad, seven-figure squad. We don't stop, we multiply. Seven-figure squad. Run it up, we raise the bar. Seven-figure squad. Play finesse, we go far. Seven-figure squad. Who are we? Seven-figure squad. What we do? Run it up, run it up. Who are we? Hey, seven-figure squad. What we do? Run it up, run it up. Started from zero, got God in the plan, yo. Now I'm counting blessings, got wealth in my hand. Used to dream small, not a mindset grand. Now I move like a boss, not a flash in the gram. It's a squad, not a clique. It's a mission with a vision. We building seven figures, not just flexing for in the grind, purpose in the hustle.
A lot of money. Now, everybody got offended, but nobody did the math. And nobody talked about this mindset. Proverbs 21 verse 20 says this: there is precious treasure in the house of the wise, but a fool devours all he has. Now, whether you make $40,000 or $40 million, or in this case, $100 million, foolishness feels the same. And then we're going to take a look at the Inside Edition new report of this IUL scam by Kyle Busch and his wife, as the headline, that IUL is a scam. They got scammed out of $10.4 million in premium deposits, $8.5 million over, I believe. But this is the classic American media. Zero context, zero math, now maximum fear. And we're going to be breaking down exactly what they got wrong and what they conveniently left out of this clip. Next episode, we're going to be the next reel we're going to be reacting to is this young lady building her insurance business, and compliance officers, regulators, and lawyers will, if they were to see this, they'll go full gremlin watching on how agents talk about Index Universal Life insurance online. You want to pay, if you're in insurance business, you need to pay attention. If you're a client of Index Universal Life, pay attention. You can't claim expertise and violate compliance in the same sentence. I've been doing this now for 26 years. I'll show you what's real, what's risky, and we'll get your license terminated before your lunch break. And the next reel we'll be reacting to is, why are 80-year-olds still working in America? The purpose that they have in life to continue in the workforce? Is it passion? You up. Because at one point they were 20 years old. One point they were 30 years old. Because the future you avoid planning for eventually becomes the future in your president that you actually fear. Next reel we're going to be reacting to, Black and brown families losing homes because of probate. This is generational wealth slipping away, not because people didn't work hard, because nobody taught them how to protect what they built. Today, we're going to fix that. After that, next reel here we're going to react to is a guy explaining why you should pay off your car note before the mortgage. Interesting logic. Logic seems like common sense, but does it really create freedom? We're going to walk through it with stewardship and strategy, perspective, with no emotion, just truth. And finally, day 2 of somebody here is showing how to properly pay off your mortgage, or not pay off your mortgage. Maybe. Is it wise? Well, we'll see. Because the middle class has been trained to worship equity. All right, fired. I'm fired. On a $100 million contract, imagine being paid. No, he's not. I don't believe he's in the league, but he's talking about the reality.
Right here today, as we speak, I'm going to be straight for the rest of my life. No question.
History of the NFL. Wealth is measured by what you keep, what you protect, by what you multiply. And that's why I talk about, I did an episode on buy term versus permanent. Income doesn't make you wealthy. Stewardship does. Stewardship disposition and making sure of how he handled $100 million. Listen, you give a man 5-year, $100 million contract. Come on, bro. You go, bro. Or just a CEO of a company. The last thing a lot of these publicly traded companies are doing, their CEOs are doing, is taking a salary. They're taking a large part of their income, their compensation package in stock, ownership, betting on them growing the company and them being rewarded by growing the company. So they'll take or some of these founders, a lot of these CEOs, Jeff Bezos, you talk about Elon Musk, $60,000, $80,000 income salaries because their compensation comes from stock ownership. So number one, taxes. Again, also depending on where you play, you might be playing in a state that has state income tax. You can also have to pay jack tax. So if you made income in California, you made income in New York, made income in Illinois, you got to pay state income tax based on the game that you played there. And here's another thing. A lot of guys don't like to be playing is international because they're playing in Europe, in England. Guess what their taxes are? Up to you know what? They're paying a lot of taxes international. And guess what America says? If you make money in another country, you still have to pay taxes here. So not only got to pay international income taxes, but you got to pay the income taxes if you were made the money here. So you got to pay dual tax. And second, agent fees, manager fees, trainers fees, you got to pay that. Third, lifestyle inflation, family pressure, entourage, people that made promises to on your come up. Fourth, the average NFL career is 3 years. And you're trying to stretch short-term income across a lifetime. Bro, are you like literally on the phone while I'm doing a YouTube episode? Got it. My man here, Darren, working. So Odell isn't wrong. He's just speaking from a world where money evaporates if you don't have the discipline, structure, and the right people around you to manage it. So you got to ask yourself this question. I don't care if you're making 40 grand a year, 60 grand a year, $100,000 a year. What's your family pressuring you to do? What's your family pressuring you to do? Proverbs 21 verse 20 says this: there is precious treasure and oil in the dwelling of the wise, but a fool devours all he has. You can devour $40,000 a year. You can devour $40 million a year. How fast? Let me ask you this question. How fast it is to spend money? For many of you that had a tax refund check, and many of you can't wait for the beginning of the year to get your tax refund check, but how fast does that tax refund check go? How fast does your company bonus go? I remember when I got a $6,000 bonus for re-enlisting the Marine Corps, my second contract. And guess what they said? We get paid half of that. You get paid half of that contract up front. You're $6 grand, you're getting paid $3 grand right now. But that $3 grand taxed. Right? So I had a couple $1,000 after that in terms of taxes after my military bonus to stay as a corporal in the United States Marine Corps. I took that re-enlistment bonus. I went to Korea. I spent my money in Korea. Osan Air Force Base. Spent money there because that's where they made before it was made in China. A lot of things were made in Korea. And then the next part of my bonus, because I didn't read the fine print, next part of my bonus, the next half is paid over the next 4 years incrementally, 25% of that remaining $3,000 incrementally paid 25%. And that part was taxed every year that I got that bonus. But here's what blows my mind, and I need y'all to hear this. Most people are dragging all on the line. So we're mad at him, but we don't even look at our own stewardship. This is why I teach what I teach. This is why last week's episode mattered. That's why I talk about liquidity. I talk about safety. I talk about protecting the downside, of building a system of predictability. I talk about keeping your household out of financial chaos. Because if NFL players, NBA players, professional athletes with world-class paychecks can lose it, what do you think happens to the average American with no plan, no mentor, no manager, no margin? And so, please, don't get triggered. Get trained. Educate yourself. Get yourself mentored. Because Odell's comments in his viral reel isn't an insult to you. It's a warning to you. Because money without wisdom becomes a weapon. And it's going to destroy you faster than it blesses you. And some of you guys are waiting for the end of the year bonus. Listen, $11.8 billion was spent this past Friday on Black Friday. And yet America is talking about how bad they have it. Stop it. So instead of laughing at Odell Beckham Jr., learn from him. Study him. Study the mistakes. Study his perspective. started his stewardship. Because whether your contract is $60,000 on your salary or a $60 million or $100 million contract, the principle is still the same. If you don't command your money will command you. Speaking of money commanding you, let's take a look at this next clip here of another professional athlete that has lost a lot of money inside Index Universal Life. Kyle Busch and his wife did an interview on Inside Edition talking about how much money they lost. Let's take a look at this clip.
A huge name in NASCAR racing. Now he and his wife are coming to Inside Edition to say they were scammed by a life insurance agent they say sold them a policy and didn't disclose the risks. They say the policy was full of hidden fees that cost them millions.
Kyle Busch.
Behind the wheel, legendary race car driver Kyle Busch is a bold champion, as well as being known for his hot temper. Off the track, he's friendly and full of charm. Just last week, he and his wife Samantha hit the red carpet at the Country Music Awards in Nashville. And when it comes to protecting his family finances, the NASCAR champion says he prefers playing it safe rather than taking the risks he does on the track.
My days of racing are coming closer towards the end, so we were kind of thinking for our future, you know, what do we do? What do we set up for? What do we set up our children for?
So he says it felt like a victory lap when an
And I was like, okay, this sounds really, really good.
They're like, this is safe. This is great. This is my future.
How much money did you put into the plan?
10.4.
That's a lot of money to lose.
That is correct.
Now they're suing the agent and the insurance company, saying they were lied to and that the policy contained hidden fees and was really designed to rake in huge commissions.
The commissions on my policy alone were over 35% of $10 million. It's a pretty easy number to figure out what's in his pocket.
As a race car driver who had a bit of a hot temper, I can't imagine you weren't mad.
I was mad. I was upset. I felt taken advantage of.
The policy is called Indexed Universal Life Insurance.
Pacific Life has been a leader in the Index Universal Life marketplace since 2005.
Where part of your premium payment goes into a fund that's supposed to grow, like the stock market. Agents from many companies claim the policies are better than a 401k. But are they?
It's a powerful wealth building tool, hiding in plain sight.
We probably get a dozen calls a day at my law firm, some version of, I've lost my life savings.
Reichert says the policies are so complex, most agents don't even understand the risks.
They're not educated on the products, they're educated to sell, and they're pretending to be financial advisors.
That's why the Bushes say they trusted their agent. You thought he was helping you plan for your future?
That's correct. I thought he was helping me set up my future, our future, for our kids and for our life. You look at Pacific Life and the big blue whale, how could this be bad?
Well, it's a huge company. That can't be a scam. This is safe, and I'm doing something great for my family or my future.
But they say that trust was shattered when a bill arrived for their 6th annual premium payment after being told they would only have to fund the policy for 5 years.
I got a 6th notice for premium payments, and I was like, hold on a second here. I've already paid my 5 years.
What was your reaction?
My heart sank. I was like, you've got to be kidding me. What happened here?
They're very complicated products that are sold as simplistic solutions to people's financial problems.
Financial strategist Chris Kirkpatrick says many different insurance companies offer these policies, but he refuses to sell them himself.
I'm telling you, there are millions of policies being sold every single year to middle-class Americans that are losing $20,000, $25,000, $30,000 before they realize it.
His advice?
If anybody is selling you an IUL as a rich man's Roth or an alternative to a 401k, you need to run the other way as fast as possible.
This isn't just feel sorry for the Bushes.
This is your neighbor. These are hardworking Americans. They're losing their homes. They're losing everything from this.
We should note that the policy the Bushes bought has a disclaimer that points out the value may increase or decrease or be reduced to zero. Pacific Life tells us that they take the Bushes' concerns seriously and have been in touch with them and their legal team. They also say they stand behind all their life insurance policies, adding they have helped millions plan for future financial security.
Yep, and they've done it for 150 plus years. So, all right, let's get into it. Let me clean this Kyle Busch situation up right quick, because Inside Edition turned a miscommunication into a media circus and called it a scam. Now, if you watched my episode last week, I broke down the Kyle Busch lawsuit. And if you watched it, you already know this. The actual product itself, an Index Universal Life and IUL, is not a scam. It's not a scam. It's been around since the mid-90s, late 90s. However, what is a scam is a poorly explained IUL is, just like any financial product in the marketplace today. But Kyle had this policy for what, 2 years? And his family had a strategy. And guys, I think there was a lot of miscommunication to what this was, because as I broke down in my video last week, if they were planning for this to supplement the retirement income, the structure and how it was sold through an irrevocable life insurance trust was the wrong structure. Now, I don't know if that's exactly what it was, because inside the lawsuit, there is no Exhibit A, Exhibit B, actual illustration that Kyle Busch and his wife signed. So we got placeholder type of illustrations via emails, but we don't actually have the actual illustration that he signed. And just let y'all know, Index Universal Life Insurance is not for the short term. It is not a savings account. It is a permanent life insurance policy. It is built and engineered for the long term. It's engineered for long-term indexing. It's engineered for downside protection. It's engineered for liquidity over time. So the exact things I covered in another video I did called Buy Term Invest the Difference. What's the best? Just another video we did. We'll put the link in the comments, the description below. But here's the real issue, and you heard me say it on last week's show. This wasn't a product problem. It was an agent problem. It was a suitability and expectation problem. This was a timeline problem. And Inside Edition never mentions this, though. And they had that little blurb at the end of it, as if they know how to read a life insurance illustration. They never mentioned the 0% floor, which means that if the stock market were to drop negative and this S&P 500 in through the life insurance company, they never mentioned the 0% floor. So if the market overall goes negative 1, 2, 3, 4, 5, 10, 20, 30, 100, they send up bills. They're just send up premium payments, because that's the way the policy. Edition doesn't talk about long-term compounding of Index Universal Life over time. They don't talk about the mechanics of index crediting, or why the wealthy have used this tool for decades when it's structured the right way. They left out everything that doesn't fit a scammy headline. So let's call it what it is. Kyle Busch and his wife didn't expose a bad IUL. What they did expose is bad communication. What they did expose is bad expectation. What they did expose is bad structure in a rushed timeline. You know, the Kyle Busch and his wife exposed the danger of agents making type of claims that can't mathematically back up with how the policy, Index Universal Life policy, is actually designed and structured. So don't let media headlines shape your financial education. Fear-mongering. Don't let fear drive your decisions. And don't let one mishandled policy overshadow 26 years of my career results. Because I've got a lot of clients that are happy with it. One of them happens to be my mother. One of them happens to be me. I've 8 Index Universal Life, as well as term insurance, as well as whole life policies, as well as I got all sorts of life insurance policies, because they're designed for different phases in my life. And it's not a one all be all type of situation. I don't buy into philosophies. Buy term and invest the difference. That's a philosophy. Whole life, that's a philosophy. Index Universal Life, I don't buy into philosophies. I buy into suitability. Based on what's best for my goals and dreams, I'm going to find a product in a company that gives me a policy for that. And bottom line, tools like life insurance don't fail people. People fail to understand the tools. You got to find the right agent and teacher to help you. And speaking of which, there's a lot of clap back to my field. There's a lot of life insurance agents in the marketplace today that are improperly representing it in the marketplace. Let's take a look at this episode, or this reel, with this young lady, although in my opinion, well-intentioned, she's completely train wrecking the whole explanation about this. I don't know what type of training she's getting, I don't know what type of supervision she's getting. And that's a downside of our insurance industry too, as well. The overall ecosystem of the life insurance industry today, especially the ones that are contracted to sell index universal life insurance. Because back in the day, there was no independent contractor. There's no be your own boss as much in the life insurance industry. You work for Prudential, you work for Northwestern Mutual, you work for New York Life. You were what they call a blue blood. You got coached, you got mentored, you had a job. You had to manage your overseeing, your training, overseeing your sales, everything. Today, the last 20, 30 years of the life insurance industry, the life insurance industry has switched its model to no longer salary and benefit for salaried life insurance agents. They just cut loose and made them all 1099 independent contractors. That's sadly what the life insurance industry has done. And unless you find somebody with experience that knows the legalities, the ethics, the morality, the do's and don'ts of the insurance industry, you can take a look at a brochure, and these insurance companies will just write anything on a brochure, and you are left to articulate it however you want to articulate it, and you might be saying the wrong thing, and somebody calls you out on it, and insurance companies are like, yeah, they said the wrong thing, because the insurance company doesn't back, a lot of insurance companies don't back the agents. Sadly, when push comes to shove, they're going to throw the agent underneath the bus, they're going to charge back the commission, they're going to pay back the insurance, the client that bought the insurance policy, their money, which I suspect might happen here in this Kyle Busch case. I'm surprised why it's gone this long. But here's a situation with this young lady. Before I show this, I mean this under no ill intention. I'm just about to share with you what a lot of good-intentioned insurance agents do in the marketplace today that sadly misspeak and misrepresent an index universal life policy. So let's break this down.
Universal life insurance policy. Now, one thing I want to tell you is that insurance brokers, agents, they're not really trying to sell you that because they get the least commission off of it. You receive the most benefit and they don't. Now, when you have an index universal life insurance policy, that is the most flexible policy that there is. It is the most expensive, but it's the most flexible. So what that is, it generates between 6 to 9% in interest. Tax-free. It coincides with an S&P 500, which is the stock market. With that policy, whenever they have a thing called a single payment, you don't necessarily have to do a single payment. You could just put a little bit in there every month. So when you do that, let's say, for example, you have $20,000, right? And you want to put that in a policy. So when you put that in the policy, you automatically get 2 accounts. That $20,000 that you put in there, that goes into your death benefits. And then it automatically opens up a separate account that is called living benefits or cash value. Okay. And that becomes 90% of that becomes available immediately. So understand that those are 2 separate accounts. And after 45 days, you can access that 90% of that money and you can borrow against that money tax-free. So that $20,000 that you put in there is still sitting there. This is money that compound interest from the money that you put in there. That $20,000 that's sitting there is still gonna put more money into that other cash value pot. So when you take that out of there, that's just free money. Tax-free. People don't understand that life insurance has living benefits. A lot of people think that it's only protecting them for death, but with the right policy, it has cash value too. You would get an IUL, which.
Okay. All right, listen, I love the intent. Young agents, excited, trying to help people. However, the execution, this right here is exactly why regulators, attorneys, and whole life purists scream, this is why IULs are garbage. So let me break this down the right way. So therefore, for any future agents out there that want to do videos like this, I hope that you represent our industry a little bit more quickly, clearly, and accurately. For example, you cannot say what she said. You cannot say IUL gives you 6 to 9% interest. It's tax-free. 90% is available after 45 days. It coincides with the S&P 500. That's free money. Agents don't sell it because they get less commission. Every one of those statements is a compliance violation, a misrepresentation, and will get an agent flagged by a carrier, a regulator, or an auditor. Now, here's what people need to understand. IUL is not the problem. Bad explanations are the problem. Life insurance, specifically index universal life insurance, is not an ATM. It's not free money. And it's absolutely not invested in the stock market. Now, IUL is a sophisticated tool. But if you explain it like a TikTok hack, you're settling and setting up clients for disappointment and legal trouble. So here's the clean version. An IUL is a version of a permanent life insurance policy with index crediting potential, not guaranteed returns, not stock market participation, and policy loans may be accessed tax advantage if and only if the policy is structured properly and maintained properly. That's the truth. And this is why we train our agents harder. This is why my team across the country is one of the most respected in the entire industry, because the number one risk in life insurance, sadly, isn't the product. It's the person attempting to explain it without a field trainer, without a manager, without anybody with experience right beside them. Because once this policy structure, this index universal life policy is designed right and is funded right and reviewed right, IUL is one of the most powerful financial tools in America. Explained wrong, it's a ticking time bomb. Let's raise the standard. Let's educate. Let's build professionals in our industry, not just promoters. Whew. Wow. Let's take another look at this video here. Because if we screw things up and we don't get people to embrace financial literacy, we don't get people to embrace the power of the life insurance industry as it relates to building your financial home, people will waste years, if not, forget money, you can always make money back. You'll waste years of the timeline for you to have your money grow and compound in a tax advantage situation in accordance to TEFRA, these are tax laws of 1982, 1984, 1988, in accordance with the Internal Revenue Code of 7702. We want to make sure things are all in compliance, because once things are in compliance, it's a beautiful thing. I've been doing this now for 26 years. I can't tell you how many clients, my own mother, my own in-laws, my own family members, we have a lot of it. It's not the only thing we have, but we have a lot of it, of Index Universal Life. It's a part and a component of our overall retirement strategy. We're not here to get a product. We're here to make sure the right strategies and products are inside that overall game plan we got going on for our financial future. It's not hinged on a philosophy. Do I have a bunch of term insurance? Absolutely. Do I have a bunch of whole life insurance? 100%. Do I have a bunch of universal life? 100%. Do I have a ton of index universal life? Yes. Have I bought cars and expanded my business and put down payments on investments because of my index universal life policy? Yes, because I've had it for 15 years. But I don't treat it like a bank in the first 45 days. Okay? It takes time to build these things. So here's an update here. 500,000 80-year-olds in the U.S. today are still working. Unbelievable. Let's take a look at this.
Americans who are still working at 80 years old. Since April, I've spoken to almost 200 Americans working past 80 for a series we called 80 over 80. In interviews, these workers shared their many motivations for continuing to work, such as financial necessity and rediscovering their purpose. Many of the workers I interviewed didn't plan to work into their 80s, let alone still be alive. The series also reported for the first time that thousands of people in their 80s and 90s still work in risky professions such as construction and truck driving, and a few dozen have lost their lives at work in recent years. The series encourages safer working conditions, establishing more robust retirement planning networks, and providing necessary health benefits for workers of all ages. Read more of our coverage from our 80 over 80 series at businessinsider.com. What's it like?
Family, this is not inspirational at all. That is not hustle culture. That right there is a warning sign. At one point in their life, these 80-year-olds, at one point in life, they were 20 in the 1960s. At one point in their life, they were 30. They were 40. They were raising kids. They were buying a house. They were expanding their family, growing their family, raising kids, putting kids to best schools the best way they know how. And they accomplished a lot, did a lot. But please hear me. I am not judging these 80-year-olds at all. I'm judging the system that has failed them and a system rigged against you and I to make us economic slaves to the system. And there's a lot of financial lies today in America that's conditioning us to live a life of debt, servitude, and dependence upon church, charity, government, other people versus being independent. Now, Business Insider says they're working because they can't afford rent. Healthcare costs have crushed them. Retirement accounts have dried up. Social Security isn't enough. Now, this necessarily isn't shocking to me. I've been saying this for the entirety of my career and will continue to say this for the entirety of my career. In my episodes last week, and even my buy-term invested difference breakdown, I said, if you don't build your financial armor early, building that financial armor early, tuck away $25, $50, get a basic term insurance policy. I don't care if you feel you're broke. These insurance companies are creating policies so affordable for people to buy life insurance that later on, when your money's right, you can convert it to a permanent policy that lasts you till the day you die. But here's the truth that nobody wants to admit. If you don't build your financial armor early, your 80-year-old self will pay for it. So here's the truth. Many 80-year-olds today aren't working for purpose or passion. They're working because they never were taught how to protect their income. They were never taught about liquidity. They were taught that paying off a house is probably not the best thing to do. You want liquidity today. You want access today. That's why mortgages like reverse mortgage is a product that's entered the marketplace the last 20, 30 years. Many of them were not taught financial leadership and financial stewardship. They were told just to save, hustle, grind, trust Social Security, trust your employer, trust pension, and hope for the best. That the best years of your life, you commit to somebody else for the hope of a promise that for the rest of your life, someone or something will take care of you. Well, folks, let me just remind you that someone or something is you. You got to take care of you. If you haven't gotten it through your brains yet that you got to take care of you, it's not going to be your boss. It's not going to be your company. It's not going to be the union. It's not going to be Social Security. It's you. And hope, folks, is not a financial strategy. Not a very good one. It's an inspirational one, but not a very good financial strategy because you can't quantify it. Proverbs 13:22 says, a good man leaves an inheritance to his children's children. So how are you going to leave behind an inheritance for your children's children if you're still clocking in at 80 years old? This should light a fire under everybody right now watching this. If you don't want your kids seeing you work at 80, was that what you want? You want your kids seeing you still working at 80 years old? Because you have to, not because you want to? Well, if that's the case, then you need right now to start building margin. You start building protection. You start focusing on ways to increase your cash flow now. Not only will the 80-year-old version of you love you and appreciate you, the 5-year-old version of you right now will thank you and appreciate you. The 10-year-older version of you will thank you and appreciate you for creating a lot more flexibility and margin, space, and leverage for you, not for the banks, not for the government, not someday, not eventually. You got to do it now. Now. Because your financial future is begging you to wake up right now. So, some tangible things you can do. Like I just mentioned earlier, get yourself a very inexpensive life insurance policy. Start talking about $25, $50, $100 away. Start finding, like literally find yourself a budget. And by the way, for those of you in debt, I'm going to put a link here in the section below. Okay. It's my friend Armin. He's got a company called Mediator Debt Solutions. Have a consultation. It's free. Have a consultation with to get out of debt. So therefore, all that money you got going to credit cards, because I worry when people charge up all this, every day became Black Friday. Deal of the day, deal of the lifetime, deal of the century, every week in my inbox. Because I focus on my cash flow, focus on my income. But right here, we'll put in the comment section below, we'll put in the description, Mediator Debt Solutions, to get a free consultation. And if you really want to start changing your life, attend my next event, February 12th, 2026, called Cigars, Wealth, and Whiskey. Because the best thing that you can do in your life is to get you around the right proximity of people that are thinking more, wanting to be more, and willing to execute to live a life of more. don't know about you, man. When I was broke in the United States Marine Corps, making 20 grand a year as a sergeant in the Marines, I was not happy. The moment I started changing the books I read, the meetings I would attend, the people I'd surround myself with, that's when I saw a new perspective on my life. So attend my next event. And by the way, Jeff Karcher of the newly formed Texas Stock Exchange will be my special guest. I'll be interviewing him on stage to let people know here in Dallas, Fort Worth area, the amazing opportunities that's coming to Dallas and how to get ahead of it, to take advantage of it by being in rooms like Cigars, Wealth, and Whiskey. February 12th, that's a Thursday, 2026, next year. Less than what, 80 days away? Let's go. So let's go on to the next reel here. This guy here is talking about, speaking of real estate, let's talk about this gentleman here talking about probate and how it's affecting ownership of black and brown, in the black and brown community of owning real estate.
Rates of probate. So what does that mean? Is that when the individual passes, their house is not in a trust, so the state takes over, and it's called the probate process. And that's when the majority of houses get lost, because now people could dispute it, people could fight for the assets, etc. The only way to prevent that is to have your property in a trust. Okay, it prevents probate, and it has a will, so you could say who has what. Ladies and gentlemen, Mexican people, listen up, go get a trust. Avoid all the headaches. Latinos, Hispanics, Mexican Americans, and black people have the highest rates.
Okay, the highest rates of losing homes. Okay. All right, so if you haven't read yet, by the way, before I get into this, if you haven't gotten my book yet, Keep the Keys, make sure you purchase it today. It's a bestseller. It's a #1 new release in mortgages, in buying and selling homes, in real estate investing. Keep the keys, because one thing to get the keys to your property, because you're showing your best financial picture of your life. But it's another thing to keep the keys when you're not in the best financial picture of your life. You go through the winds of life, divorce, bankruptcy, job loss, AI infrastructure, having a kid, expanding your family, having to bring in your parents, your in-laws' parents, your in-laws. Okay, so it's one thing to get the keys, another thing to keep the keys. I have 7 strategies inside of this book. It's a very small book. It's a very, very quick read. You can read it in less than an hour. 90 pages here, and I've been on a 14, going 15 city tour now, talking about these strategies. I can't tell you how many people come to me and say, listen, man, I wish I knew this 20 years ago. I wish I knew this 5, 10 years ago when I bought my first property. But, okay, this hurts in terms of people in the black and brown community losing homes due to probate, because I've seen this happen too many times, not on the news, but in real life. Black and brown families losing the home of the parents and grandparents who worked for that home their entire lives, not because they didn't love their family, not because they didn't work hard, not because nobody taught them how to protect, because nobody taught them how to protect their family, but nobody taught them how to protect what they fought hard to build. And so when you have no trust, I've got a couple trusts behind me. I wonder if this is one of my trusts. Okay. This is one of my trusts. Got a bunch of tabs in there, okay? Got a bunch of tabs in there. We have a blended family. By the way, it's right here. There's a copy of it right here, because something happens to me, my family knows exactly where to get it. There's my durable powers of attorney. It's my DNR, do not resuscitate or resuscitate. It's really do not resuscitate. Let me go, man. I don't want to live my life as a vegetable if you find me in that condition. But there's things in there that I've already made decisions of where my money, my estate is going to go, and it's definitely not going to be the government. Right? It's going to go to no members of my family that's on drugs. It's going to go to no members of my family that's an alcoholic. It's going to go to members of my family that are showing ways to improve our community through leveraging the last name that I'm building for them and the reputation and business I built for them. That's where my money is going, through a trust. And so when there's no trust, no will, no paperwork, the state steps in and does what the family never intended. This isn't about politics. This is about stewardship. And so here's what people don't realize. Probate can drag on for years. For example, let me see if I can pull it up right here. All right. It'll surprise you. I'm not going to even say it. This guy is in probate. Okay, here we go. Right here. This guy's in probate. Okay. Show it here. You know what I'm talking about? I'm talking about Michael Jackson. What? Court filings in June 2024 by the executors Jackson say died with more than $500 million of debt. At the time of his death, his estate faced over 65 creditor claims and multiple lawsuits. Do you know why? Because it wasn't in the trust. His estate, the estate of Michael Jackson, has since rebounded, generating enormous posthumous revenue from music catalog sales, licensing, and merchandising. There remains a major tax issue with the IRS over how much the estate was worth when he died. That's what I'm talking. This is what we're talking about: probate court, tax court. Now, having more than $5 million of debt does not necessarily mean that the state owed exactly that. Okay. Let me see here. Let me go to. Let me not go to ChatGPT. Let's just go here to. Let's see. No. I'm gonna go to Google Chrome. Yeah. So Michael Jackson estate earned how much in 2024? So his estate is still making money. Yeah. Michael Jackson's estate earned approximately $600 million in 2024. Why? Because he owned a record catalog. He bought a one-time deal to sell his stake in 50%. He owned a publishing catalog owned by Sony. He bought it from Sony. I believe it's Sony, AMG, BMG Records. Okay? And so his family decided to sell 50% of that stake. And since they decided to sell 50% of that stake, it may generate $600 million in cash. But the problem, though, is probate court's looking at it as like, well, hey, you owe us money in estate tax court. Because when you die, okay, I'll put this here. Last tax form when you die. Did you guys know that? It's called a 706 form, right? The last tax form you file in terms of assessing your estate is a 706 form. Okay? The United States estate tax return is required only if the gross value of the deceased person's estate plus any adjustable taxable gifts exceeds the federal filing threshold for the year of death. For a decedent dying in 2025, this threshold is $13.99 million, basically $14 million. So, how many of y'all watching this right now, you're planning to be wealthy? Okay? In my opinion, wealthy is 10 million plus of liquid cash. Liquid cash. Okay? Liquid cash. It's my standard. Okay? If you die with $20 million with that $10 million of liquid cash, in addition to your life insurance, your real estate holdings, your stock ownership holdings, and your liquid cash, guess what you now owe? You owe estate tax, debt tax. Guess what your family has to do? They got to fill out the Form 706, and they don't fill out the Form 706, and you didn't have a will or a trust. In addition to your will, you didn't have a trust. You didn't have a revocable living trust. You didn't have an irrevocable life insurance trust, kind of like what Kyle Busch is trying to do early in the case I was establishing. Then your estate is exposed to death tax. And this is what this gentleman means by many black and brown families are losing their houses to probate. Now, many of them may not have homes or estates over $14 million. They're just losing it because they think it's naturally going to go from one family member to another. In some states, it might, but it's better to have a trust, own your property, so therefore it stays private. When you put a trust in your estate, what you're doing, you're putting a cloak, you're putting a document, you're putting a corporation to protect your family estate. Like, for example, if Michael Jackson's stuff was in a proper estate plan, none of this stuff would be open right now to the public, to public viewing. It wouldn't be Googleable. It wouldn't be ChatGPTable. Nobody would know about it. Kind of like what nobody knows right now about Charlie Kirk, because his stuff was inside a estate plan. Okay, nobody knows the specifics about his money. They might know about his life insurance or his dealings with Turning Point USA, but a lot of people, when they pass away and they're wealthy, they have proper estate plan put together, you are now private. A lot of people don't know the details about the Rockefeller estate. Why? Because it was put in a proper trust. So these are the things that we have to consider when you're starting to build wealth. All right. Go to the next video here. This guy's talking about
people throw extra.
This guy's talking about what he's going to pay off first, his car or his house. What do you think?
money at their house, but not Amy and I. Our car is a depreciating asset. It loses value every year and it takes real money out of our budget every single month. Our house, yes, it's expensive, but it's actually an appreciating asset. But throwing extra at the mortgage just locks it into home equity. It doesn't lower our monthly cost of living. Whether we have a lot of home equity doesn't really matter to me. We get to live in the same house either way. So here's the mindset shift. Not all debt is created equal. We're attacking the car loan
Good
because
debt,
it
bad
frees
debt.
up
Good
cash
for you.
flow. We're paying the minimum on our mortgage and then investing as much as we can to cover it with cash flow in the future. Hey, this is one of the choices we're making to buy back time now, not when we're 65. Every
Good for you.
dollar that we invest
Or you're
unlocks
80.
more freedom in the future. Send this to your partner because your debts are not equal. This is why I'm paying off my...
By the way, this is a very easy thing here. Everybody know this. Your car is a depreciating liability. It's a depreciating asset. Okay? It's going down in value. Your home, however, is a potentially appreciating asset. And so, and plus with real estate, you can leverage it, whereas cars you cannot. So people today are racing to pay off that mortgage, but they're racing to throw money at something losing value versus the thing. Into gaming the system. Think about stewardship again. Let me break it down like I do in my Keep the Keys workshops. A car loses 15 to 20% of its value as soon as it rolls off the lot. The second it hits the road, that car, as much as you like it, still smells brand new. It's now worth 15 to 20% less as soon as it drives off the lot. Your mortgage, it's tied to an asset that historically, in many different communities, people know this, rises over time. And that comes also with tax advantages. So here's the part that nobody wants to hear. Every dollar you overpay on a depreciating asset is a dollar you cannot use to build liquidity, protection, or income. But I agree with this guy, though, because I want to rush to pay off the car payment because every month, every year that the interest is building and accruing, you're losing the ability to earn that money in the future. In the future. Don't finance a car. Buy it cash. Well, Matt, easy for you to say. I know it's easy for me to say, but I have this thing that I like to encourage everybody to have. It's called financial discipline. It's called financial discipline. Listen, I wrote about this. Let me go to my Instagram here. I did this on my Instagram. A lot of people liked it. A lot of people didn't like it. But it was one of the most viewed things. It says here, America isn't in an inflation crisis. America is in a self-control crisis. Black Friday always exposes it. Retail therapy, impulse buying. People feel broke, but the parking lots in a parking mall, in the parking complex, say full. Now, I've been on the road for my 13th city, Keep the Keys tour, talking about families, about money mindset, renting versus buying, and how to leverage home equity for liquidity. Everyone says, Matt, everything feels tight. So let's be honest. Previous generations saved more because they didn't buy so much crap. They weren't chasing status. They weren't flexing Gucci belts while working at Chick-fil-A. By the way, that was a true story. A drive-through worker asked me for money tips while I was sitting in my Rolls Royce. I pointed right at his Gucci belt and said, start there. Work belt, huh? He's wearing his Gucci belt for work. See, in Proverbs 21, verse 20, the wise. So this ain't politics. This is wisdom from the richest, wisest king. If money feels tight, don't shop your way into more stress. Don't let retail therapy rob your legacy. Choose stewardship. Choose discipline. Choose the future your family deserves. What future does your family deserve? I hope it's a very wealthy one. I hope it's a very free one. Just remember this. God calls us to stewardship, not sentiment. Proverbs chapter 24, verse 3 says this, by wisdom, a house is built. By wisdom, a house is built. Not emotion, wisdom. So let's be wiser, shall we? Let's be wise with the order we build wealth in. Not for GMAC, not for all these banking companies that finances your cars, but for you, your family's.
I put my mortgage into a mortgage calculator, like, oh my God, the interest looks insane. But what you're not doing is comparing to what else you could use that money for.
Hello.
Yes, if you pay off your mortgage early, you'll definitely be saving a ton on interest. But what are you missing out on by doing that? So what my dad taught me is just like, sit down, Gina, and do the math. What are your options? So we went through a simple scenario. You can pay off a 4% mortgage early, a 5% mortgage early, even a 6% mortgage early, or you could take that extra payment you were going to make and you could put it in the stock market and let it grow inside of your wealth portfolio. Now, the S&P 500 historically over the last 100 years has returned 10.13% a year. That's including all the major downturns. If you just leave it in the market and let it grow, on average, it'll grow 10.13% a year. So I can save 5% or I can grow by 10% and pay the 5%. In which case, I'm still net up 5% after I account for the interest I paid on my mortgage. And if you just sit down and do the math, you'll see that the numbers are insanely in your favor most of the time when you decide not to pay off your mortgage. Whether or not you decide to pay off your mortgage, it's really a personal choice. The core of the lesson here is do the math first and then make an informed decision. Don't just make emotional decisions with money. Oftentimes, the decision to pay off a mortgage early comes from an emotion. It comes from, I don't want to owe anyone anything and I hate interest, right? That's a very emotional-led decision versus I've done the math and here's my best mathematical option for the cash I have available, and that's what you should do. That's also why my family...
Somebody on the internet is saying what I've been preaching for years. Stop worshiping the mortgage payoff. Stop starving your liquidity. Stop locking your money into something you can't control. And what am I talking about? That's the equity that you have inside your house. And now this reel right here, this is the first time I've seen someone tell the truth that the middle class refuses to believe or hear, because so many purists out there operating in financial poverty. So what I'm looking at going forward in my life for the rest of my life is anti-equity traps. I wrote a book about it. It's called Gotcha. I want to get away from the gotchas. So here's what I said in my book, Keep the Keys. Here's what I said in my book, Buy, Term, and Invest the Difference. The same thing, the same philosophy, by the way, Buy, Term, and Invest the Difference. Every extra dollar you throw at your mortgage becomes a prisoner in your house and earns zero rate of return for you. You can't access the equity in your house without begging a bank or a loan officer, please allow me to touch my money, even though I've been a very good financially disciplined to send extra payments to this mortgage company for many, many months and years. But now then push comes to shove and I want an opportunity to take advantage of it or I have an emergency, they won't let me take out my own money, even though I overpaid it months or years in advance. The moment you send additional mortgage payments to your mortgage company, you drown your flexibility. You weaken your own emergency fund. Equity inside your house is not an emergency fund. You eliminate opportunities. When things come your way, for example, I was just talking to a guy last Monday. He needed 50 grand to take advantage of an opportunity. He says, well, I got to pay off house. I got to cash out refinance. But if you spent the last 20 years putting that money, just like this young lady says, who's a beneficiary of a trust fund that was established many, many decades ago and generations ago, now you got liquidity. In addition to having a house and having the same amount of cash equivalent to the mortgage balance of the house, you got choice and flexibility of whether or not to pay off your house also or keep this rate of return flowing and growing. And the more money you put towards a mortgage company, you put yourself in financial handcuffs, all for a feeling. So meanwhile, what's life? What's life? You still have rising healthcare insurance costs, rising property taxes, rising cost of living, zero diversification because everything is inside your house. You got zero clarity because, again, everything's inside your house. All house rich and a cash poor life. But I've coached. My alternative in my book, Keep the Keys. If you haven't got it yet, get the book, Keep the Keys. By the way, go to this QR code. Get a couple free tools for me. I got a free worksheet there for you to process. I got a free worksheet there to evaluate where you put your money. If somebody was to tell you where to put your money, get it for free. I'm not charging anything for it. Go to this website, keepthekeysbook.com. Scan this QR code. Get a couple tools before you even decide to buy the book. If these tools make sense for you, then buy the book. I'm giving you something for free before you make that investment of $20. Let me remind you again, your home is not your retirement plan. Your equity is not an emergency fund. Your net worth on paper is not cash flow. if you don't want to hear that, let me give you the faith angle here in Proverbs 21, verse 20. The wise store up choice food and olive oil, but fools gulp theirs down. You can't store anything if your wealth is trapped in drywall. Instead, redirect those extra mortgage dollars into liquidity, into protection, into future cash flow, into policies and places where money can move. That's why it's called currency. It's just kind of like your electrical current. Money's meant to flow. Put your money towards tools that serve you and your family. Put your money towards strategies that don't die on you. This reel said it loud and proud. So proud of her. Paying off your mortgage early feels good, but it doesn't always do good. I think that's it. We got one more? No, that's it. As I wrap stuff up, we've got people here in their car on Amazon Music, on iMusic, all over the place. Connect with my guy, Million, my alter ego, my AI son, Million there, called the Million.ai, and an album's called The Movement. That being said, guys, if you haven't done so yet, please put your biggest takeaway in the comment section below. Either agree with me, don't agree with me, please. I want to know what's your feedback. If you haven't done so yet either, if you haven't subscribed, make sure you subscribe to the 7 Figure Squad YouTube channel. Hit like, drop your biggest takeaway in the comment section below. With that being said, I'll see you guys next Tuesday for Millionaire Responds here every Tuesday, 2 p.m. Central Standard Time. Millionaire Responds, based on what's going on in the marketplace today, right here on 7 Figure Squad YouTube channel. From Dallas, Texas, I'm your money smart guy. And until we meet again, good to you, live smart. Good to you, love smart. And be money smart today. See you next week. Bye-bye. Bye-bye.